Hey everybody, Joe here from Avalon. In this video, we're going to be discussing an employment form that is as common as it is confusing. If you've been employed in Canada or you are an employer yourself, you very likely fill out a TD1 form. In fact, it's so common and so very Canadian, you might even consider it as a part of our heritage. This video will show you how each section of the TD1 form works and how to complete it. You can watch the entire video to get a full rundown, or you can use the chapter links within the description to jump to a specific section of the form. I'll also cover how the TD1 form affects your taxes, and then we'll take a quick look at how to complete the back of the form as well. So all that and nothing else coming right up. First up, I'll explain exactly what the heck the TD1 form is. The TD1 form serves a specific purpose. It guides your employer on how much income tax to deduct from your paychecks throughout the year. While this form is not your actual tax return, it plays an essential role in influencing your financial situation at tax time. So here's a quick summary of what you need to know. The TD1 form is personalized to you. It considers factors like having children or being a student affecting how much tax that you pay. It helps you avoid tax surprises. By accurately filling it out, you ensure that the right amount of tax is taken so you don't owe a lot or get a huge refund at tax time. It's adaptable. If your life changes, like getting married or starting a new job, you update the TD1 form so your employer can adjust your taxes accordingly. And finally, filling out the TD1 form is an ongoing thing. You'll keep it up to date as your life changes to keep your tax situation correct. It's a key tool to get the tax part just right and avoid any surprises at tax time. You might find your eyes glaze over when you first look at the TD1 form, but don't worry, it's not all that painful and we're going to take it one step at a time. There's also provincial and territorial TD1 forms that work in a very similar way. This video will also give you the understanding needed to fill out your applicable provincial or territorial TD1 as well. Check out the link in the description for a link to all the TD1 forms and follow along. We'll start with the easy part, your last name, your first name, birth date, address, including postal code and social insurance number. These are pretty self-explanatory, so I won't go into much detail here. Line 1, you will enter your basic personal amount. Unless your income is over $165,430 during 2023, you would enter a basic personal amount of $15,000 on line 1. For those making more than $165,430, there's a worksheet called the TD1-WS that will help you determine the correct amount to enter into line 1. It's also linked in the description below. The worksheet will determine your basic personal amount somewhere between $13,521 and $15,000. As your income goes beyond $165,430, the calculated amount decreases from $15,000. For example, if your income is $180,000, the calculation would look something like this, and you would claim $14,600 and change on it. Once your income level is beyond $235,675, the sliding scale stops and your basic personal amount is capped at $13,521. Line 2 is for those who have a child who is infirm and under the age of 18. Here you'll enter $2,499 per infirm child. You can find out more information on the Canada Caregiver amount eligibility linked in the description below. Line 3 is for those 65 years of age or older. The amount you can claim depends on your income. If your income is under $42,235, you'll get the full amount of $8,396. If your income falls between $42,235 and $98,309, you can claim a prorated amount. Once your income exceeds $98,309, you won't be able to claim the age amount. You would use the TD1-WS form again to calculate the prorated amount. For example, if your income is $50,000, your prorated age amount would be $7,246. Here's an example of how that calculation would look. If you receive pension income other than CPP, OAS, or the Guaranteed Income Supplement, you can claim a $2,000 amount on line 4. If your pension income is $2,000 or more, you'll enter $2,000 on this line. If your pension income is less than $2,000, enter that amount instead. Line 5 is for individuals who attend a post-secondary education program. Here you'll enter the amount of tuition you pay. This is going to reduce the amount of tax that your employer will deduct from your paychecks. Line 6 is the disability tax credit. You can only claim this if you've applied for it and the CRA has agreed that your claim is valid. If eligible, you'll enter $9,428 here. You can find out more information about the eligibility for the disability amount linked in the description below. On line 7, if you have a spouse or common law partner who doesn't earn any income and lives with you, this allows you to claim up to $15,000 credit. The amount to enter on line 7 is calculated using your basic personal amount that you entered on line 1 of your TD1 form. There are two versions of this calculation. If your spouse is not infirm, take the amount that you entered on line 1 of your TD1 form and subtract your spouse's estimated net income for the year. If your spouse is infirm, take the amount you entered on line 1 of your TD1 form, add $2,499, then subtract your spouse's estimated net income for the year. For a bit of clarity, having an infirm spouse means that they have an impairment in physical or mental functions and will likely continue to be dependent on others for an indefinite amount of time. Line 8, the amount for an eligible dependent is for those who have a child but no spouse, or those whose spouse does not live with them. You can claim this as an equivalent to spouse amount. The amount works the same as line 7, where there are two versions of the calculation. If your child is not infirm, take the amount you entered on line 1 of your TD1 form and subtract your child's estimated net income for the year. If your child is infirm, take the amount you entered on line 1 of your TD1 form, then add $2,499, then subtract your child's estimated net income for the year. Simple. Line 9 is for those who support an infirm spouse or dependent, and that person's income will be $26,782 or less during the year. If this is you, then use the form TD1-WS again to calculate the amount to enter on line 9. Now here's how the calculation works. Step 1, take the base amount of $26,782. This is given in the form. Step 2, subtract your infirm dependent's estimated net income for the year. Step 3, enter the difference in line 3 up to a maximum of $7,999. Step 4, subtract the amounts from either line 7 or line 8, depending on which applies. Step 5, enter this amount on line 9 of the TD1 form unless it's negative. If it's negative, enter 0 or leave it blank. Line 10 is for those who support an infirm dependent who is 18 years of age or older. If the dependent's income is $18,783 or less, enter $7,999 on this line. If the dependent's income is between $18,783 and $26,782, use line 10 on form TD1-WS to calculate this amount. Here's how that calculation works. Step 1, take the base amount of $26,782. This is given in the form. Step 2, subtract your infirm dependent's estimated net income for the year. Step 3, enter the difference in line 3 up to a maximum of $7,999. Step 4, subtract any amount that will be claimed by another caregiver if applicable. Step 5, enter this amount on line 10 in the TD1 form unless it's negative. If it's negative, enter 0 or, as always, leave it blank. Line 11 is for any amounts that are transferred from a spouse or common law partner. If they will have any unused age amount, pension income amount, tuition amount, or disability amount, enter that on line 11. Moving on to line 12. Line 12 is for any amounts that are transferred from a dependent. This includes either unused disability amounts or unused tuition amounts that will be transferred to you upon filing your income tax returns. Finally, we've arrived at line 13. You'll add up all of the amounts from the previous lines and enter that amount on line 13. This number determines your deductions for the year and reduces the amount of tax that your employer will withhold. The larger the amount on line 13, the less tax your employer will deduct from each paycheck. A lower amount on line 13 means that typically more tax will be deducted from each paycheck. Next, it's important to understand how your TD1 form affects your taxes as an employee. When you fill out a TD1 form correctly, considering all of your individual circumstances, it helps your employer deduct the right amount of income tax from your salary. In an ideal scenario, the amount of tax deducted should align closely with the total tax you owe for the year. Then, when you file your tax return, you would neither owe much tax to the Canada Revenue Agency, the CRA, nor expect a substantial refund. However, if the TD1 form isn't filled out accurately, it can lead to a larger than expected tax balance owing or an unexpected refund when you file your tax return. An unexpected refund may sound like a good thing, but this actually means you've overpaid taxes to the government throughout the year. Let's dig into these two scenarios a little bit further to help build a better understanding of how the TD1 form affects your taxes. Under-deduction of taxes can happen when you include more tax credits on your TD1 form than you're eligible for. Said another way, if you overstate your tax credit claims on the TD1 form, your employer may deduct less tax from your paychecks than you should have been paying throughout the year. Less tax deducted throughout the year could result in a tax balance owing when you file your tax return. This means you would owe money to the CRA when you file your tax return. It's common and typically fine to have a balance owing when you file your tax return, but it can also be an unpleasant surprise if you're not expecting it. On the other hand, over-deduction of taxes could happen if you omit some of your eligible tax credits from the TD1 form. If you underestimate your claims for tax credits, your employee may deduct more tax from your paychecks than necessary. In this case, you're essentially giving the government an interest-free loan throughout the year because you're paying more taxes than you should. While you'll get this money back in the form of a tax refund, it could have been in your hands earning interest or helping manage your cash flow during the year. So ensuring that the TD1 form is filled out accurately to your actual circumstances is critical to avoid both under-deduction or over-deduction of taxes. This way, the amount of tax withheld from your paychecks should align closely with your actual tax liability for the year. Now that you've filled out the front of your TD1 form, let's move on to the back. On the back of the form, you'll find information on when to fill out the TD1 form and what to do if you have multiple employers. To keep the length of this video from getting out of control, I'm going to cover the two most common sections of the back of the TD1 form. What to do if you're working for more than one employer, and what to do if your total income for the year is going to be less than your total amount on line 13. If you are working for multiple employers or receiving payments from multiple sources, you'll need to be careful with how you claim your personal tax credits on the TD1 form. You can only claim these credits once. If you've already claimed your personal tax credits on a TD1 form for 2023 with one employer or payer, you can't claim them again with another. If this is your situation, you would check the box indicated on the form for this situation. Enter 0 on line 13 and leave lines 2 to 12 blank. This ensures that you don't double claim the credits and helps your employer deduct the correct amount of tax from your paychecks. If you expect that your combined income for the year from all sources will be less than your amount on line 13, you should tick the box on page 2 of the TD1 form that corresponds to this situation. By doing this, you are informing your employer or payer that they should not deduct any tax from your earnings. Once you've filled out the TD1 form, make sure to sign and date it and then give it to your employer or whoever is paying you. You may also want to make a copy or take a photo of your completed form before giving it to your employer so you'll have it for quick reference if needed. And that's it, you're done. Hopefully completing the TD1 form will be much easier after watching this video. If you found this video at all helpful, please click that like button. It supports the channel here. It helps us do lots more content like this. And if you're not subscribed to our channel, please consider hitting that subscribe button as well. It really motivates us to put out the most useful content that we can. So thanks for watching this video, and we'll see you in the next one. Cheers.